Hello everyone, it is Evan from the Trade Risk here on Saturday, December 5th with a weekend market recap. We are first going to analyze the current market environment. We're going to look at some other markets, leading sectors, individual names, and then we're going to get into some trade ideas heading into next week. Now before we get started, I want to remind everyone, I do a lot of these free videos, but I never mention that I offer paid memberships to the Trade Risk. And these memberships are how I teach traders how to develop a very consistent trading routine by sharing with them exactly what I'm thinking and doing every single day. They get all of my trades in real time, how I'm managing them, trade recap videos, and there's lots of other resources. The best way to learn more about it is just to head to this page right here, thetraderisk.com/premium, or there should be a link on the top right corner of this video right here that you can click on that'll bring you to this page. The reason I'm bringing this up now is because I'm going to be raising prices soon. So for all of those of you guys who have considered joining as a member here, now's probably the best time. Before the end of the year, I am going to be raising these prices. So if you join now, I'm not going to raise them on you in the future. You'll be grandfathered in at the current rates. And I do plan to do a more end of the year trading performance of recapping the entire year's performance. I'm just trying to get a little bit further in December before I put that out there because it's not quite year end yet. But I'm going to try and release that very soon just as some incentive so you guys know sort of what to expect for results because I think that's very important. I do offer some of it down here already, but it's pretty important to know what the results of the trading system is that you're going to be signing up for. So that's sort of my spiel here. If you're interested, now's a good time. The prices are going to be going up soon, and if you have any questions about anything here, feel free to contact me, Evan M at the Trade Risk, or use the contact form up here on the page. Now let's get into the good stuff here. Let's talk about the markets. It was a exciting week this week. There's a lot of action going on, so let's talk about it. So the pattern that we had heading into this week, this is the S&P 500, the SPY ETF that tracks the S&P 500. Monday right here, this candle is where we opened this week, and we were range bound. We were in this tight holding pattern. The week before was Thanksgiving, so it was a slow sort of holiday week, and you could see we developed in this tight, a point and a half range pattern, just under 210 all the way down to 208.50. And on Tuesday, we had this nice looking breakout bar right here above this 210 level, and everything looked like it was all systems go. We knew we had the Fed the next day releasing some comments. That was a catalyst to either launch us higher or potentially sink us lower. Unfortunately, it was the lower part of it, and we did reject this breakout very violently, and we continued even more violently the next day on Thursday as we followed through to the downside. Now, this ended up turning out to be a very fast, violent washout because Friday we came roaring back. I know it was jobs day and perhaps that was it, but we came recovering all of Thursday's damage, part of Wednesday's damage, and we're now right back to where we started this week or close to it in this range with 209.50 down upwards of 210 is this cap that we've been in for quite some time, and that's right where we stalled out on Friday after almost a 2% move to the upside. So really, when you look at the weekly chart, we did nothing. I mean, we violently shook around. We tried to break out, we failed. We tried to break down, we sort of succeeded, and then we quickly retraced back into the range. So all in all, we closed flat on the week. So from the technical picture, nothing's changed here. We're sort of dealing with the same larger levels that we've been looking at. I mean, 210 certainly right above us, and then you have the highs here right around 211, then you have all-time highs right above us. So there's not a whole lot that has changed in that front. On the downside, you do have this 205 pivot level as sort of an upper bounds here. If we were using 202 earlier, which was this line down here, you can now probably inch up to 205 and use that to sort of trade against, if you're on the long side. So that's sort of where we stand. We're back into this neutral to slightly still bullish, even though despite these 2 days, we recovered it on Friday. So we're back above these fast moving averages. We're now heading back to the top end of this range. And I think all in all, you're going to have sort of a glass half full mentality here. just given the action. We had that nice flush, and now we're going to see next week. It'll be interesting to see how this market opens. I mean, if we gap lower, maybe we aren't really ready here. Maybe it's going to be a sideways move for the remainder of December into the end of the year. But if we can gap higher and all of a sudden, Friday was the start of this, infamous Santa Claus rally, perhaps then Friday started us off, and Monday will come out of the gates probing above 210. So we'll have to see what happens there. As for us, I know you guys probably know, as I mentioned in one of my other videos, we had about our highest levels of exposure here on Tuesday, right? So right on this breakout bar, we were going with it. We had a lot of setups on. We got shaken out of. We had about I think we had 9 positions on Tuesday. We got shaken out of 2 of them on Wednesday. We got shaken out of 2 more on Thursday. We got shaken out of 1 on Friday, actually. So we lost about half our exposure. We bought some more on Friday. So we're still in this rally. We're back up to 6 positions. But you can see here, when markets start to break down, you got to react accordingly. We reduced exposure, and then we put a little more on Friday. So we'll see how it goes. Still exposed to this market. We're not all in, but I think it still pays to have some long exposure on. If we look at some other markets, IWM, difference here, if you look at the weekly chart, look at the weekly candle here, we closed down 1.5%. So it's a very different result than the SPY that closed flat on the week. So you can see definitely some underperformance here. We are very clearly below 119, these highs here. So we had a high at right under 119. We had a high above 119. We're now very clearly below those resistance levels. So certainly some more work to do, closing right into some of these fast-moving averages. On the Qs, if you look at a weekly chart, we closed up 73 basis points. So there's a range here, and you can see what's working and what's not. Clearly, it's technology, it's the Qs, it's this area, and we'll get into that when we talk about sectors. You can see we closed at the highs from last week, or actually from Tuesday right here. We closed right up basically to the penny of where we closed on Tuesday. So, very much more constructive here. We're at a, resistance area, so we do need to still be cautious, but certainly bumping right up against it. So a lot more constructive here in the Qs. Now let's look at some other markets. TLTs first. Had a lot of action here in TLT. We had this big igniting move here on Tuesday. Wednesday, it held it in there. And then, of course, we had all the Fed minutes out and the release there. And as the market sort of digested that, Thursday, we had this big gap down, 2.7%, which is a big move for bonds. And then Friday, it did recover it, or recovered part of it. So, again, still just messy. It's just something that really doesn't have too much, doesn't hold my interest. USO, this one has been beaten up. This one especially on Wednesday here with a 3.6% move down, challenging the August lows. We certainly challenged them. We're now going sideways. Momentum's still down. I wouldn't want to try to be buying this. There's no reason to. I think at least get back above $12.90, $13 is a minimum before you start to try and bottom pick this. And UNG is a perfect example. There were lots of times where it went sideways, right near a prior resistance level, like when it broke down from this major level in September, and then it just kept resolving to the downside, would work itself higher, resolve to the downside, and that's all it's done. So you got to be careful in this. You don't want it to fall kind of in the same path as UNG here, because and this one, of course, speaking of UNG, is still certainly a mess. Again, no reason to really own this just yet. Gold had a bit of a bounce back here. Now, this is sort of what I'm talking about. This is where you could start to get a little more interested. Gold right here looked very vulnerable. It was in this very much avoid pattern. And now that it's trying to get back above 104, maybe there's something here. Maybe this was a false breakdown. It's too early to say right now, but this is at least the type of move that I think you want to see, or at least my preferred style, you'd want to see before you try and take a step on the long side. So, still a very tough chart, but trying to get something going there for sure in gold. Silver, similar situation. I like this one a lot more. You can see this one very clearly was, You could see that it was very reluctant to sort of break down here. We had the nice gap. Now you can see we're clearly back above this resistance level. This one is much more actionable to me. I think you could define your risk, take it at the close on Friday, put a stop down here, and see if you can get a fast move back into this range. That could be an interesting trade. Not my style, but that's something to consider there. If we look at some other setups now, I'm sorry, some more sectors here heading into the week. When you have a week like this, it's really nice when you have this kind of flush out here and then you have the strong bounce into the end of the week. It's nice to see what actually held up, what fueled this bounce. And I think there's a few standouts. The first is XLF. This is the financial sector. Looking real good again. It had a really strong move on Friday, 2.65%. You can see it's right back to all of this resistance area right in here, right around 24.85. That's been a long-term level of influence. So I think that's important. This market looks like maybe it wants to start resolving, continuing the uptrend that it started back from October. So I like that sector there for the bounce back. Staples had a strong bounce back as well. Look at this big move, 2.25%. Back above $50, back above this cluster of highs. That's a strong move. Technology, we talked about that. Very strong move here. New closing highs in XLK. New recent closing highs here. New closing highs for 2015. Multi-year highs. So, very constructive there. Semiconductors, these continue to act well, above all the fast-moving averages. Very strong here. They're not at their 15 highs, but they're certainly marching back. So, semiconductors, very constructive. Now let's get into some individual names. We'll start with Apple. And Apple had a really nice snapback on Friday. You can see it was up 3% on the day. And I've sort of written this name off here as being something interesting. I think there are still better setups out there, but the way it closed on Friday, it's right at these cluster of highs here. I think it does lead to an interesting setup if it can see some continuation early next week. I wouldn't mind. Not really my style to buy this close. I'd like to see a little bit more. Of course, it had a fast move just in one day, so I don't know if I would chase it here. It's just not an ideal setup, but I do think if it can start to clear above 119.50 or so, we could really start to see this thing continue to move, maybe get back to these highs, maybe start to work itself higher back into this prior range. It's still messy, all things considered, but it is holding, back above 117. If it gets back above 119, I think it starts to look a lot more constructive. So Apple could be shaping up there for a trade. Google continues to hang out at highs above all the fast-moving averages. You're getting a little bit of sideways rest in. It's had a big move, but if this thing's going to continue to lead, then it looks somewhat actionable here. If it can get back above 785 or so, it'll be back to making new highs. I think Google still looks good. Amazon, very similar situation here. You can see it's starting to go sideways, pausing just a little bit, stopping its complete march higher, stretched above the 8-period exponential moving average. It's now at least caught its breath a little bit. If it's going to continue to lead above 680, that's a good trigger for you to get long. Netflix, this one's off to the races. Again, this one's leading. It's above the fast 8-period EMA. This is what you're going to see. This is really tough to get on board. Amazon, Google, those are a little more right, but Netflix certainly looks great. Facebook, probably the most actionable out of all of them. This is the one that I'm watching right now. If we can start to get a close, above Friday's highs, you can see the fade on Friday, but get back above 108 ideally. I would play that for some type of breakout trade to new all-time highs. I'd like to see that in Facebook, so I'll be watching that one next week. That's almost a little prelude to a trade setup that we're going to talk about later. We'll go with Twitter next. Twitter, still just clawing on to this $25 level. It's just back and forth every other day. It's testing it. That's not ideal, but so far it's holding. Certainly looks vulnerable heading into Friday or heading into next week. Options expiration, maybe there was some play there, just the weeklies, but we'll have to see if this one holds up. Very clear breakdown short here for all of you looking to short some Twitter. I think below $25. Any continuation below today's lows, Friday's lows, looks good for short. Alibaba, this one continued nicely. It's now back near these highs here from November, $85. Get back above there. Looks like it's continuing to run. GoPro, 5% down on Friday. Certainly nothing new. The trend is lower. It continues to get beaten up. One day this will change. Maybe there'll be a squeeze of 20-30% one day. Who knows? But until something very drastic like that happens or a long sideways base develops, it's really just it's all shorts, and there's really no reason to try and pick this bottom here. And then finally, Tesla came back below, had a week. It was a weak for Tesla. Ended up closing down 0.5%, so nothing too extraordinary, but it's hanging on to this 230 level. You want to see it get back above this area. So there's a couple of pivots around this area from October and November. So you want to see it get back above there, start to gain some momentum. That one would start to shape up just a little bit, but right now it's above all the fast moving averages, so it's just coming down to retest. Nothing wrong just yet. Now, some names, we talked about Facebook. That was one, getting back above 108. I think that one looks pretty constructive. That's one I'm watching. CRM, here's one that we took on Friday. So this is a name I just got into. Members and I just got into at the close, below $82, but near the highs. I forget where we got in, 81.80 or something like that. So we're looking for this to continue. This is new all-time highs on CRM, I believe, and it's based out nicely. You can see it's failed with all these topping tails to get a strong close back above 81.50. We finally got it. Let's see if that one can continue next week. JetBlue is another name on my watch list. You can see here, nice tight pattern. Go to a weekly chart. You can see it's been an uptrend now for all of 2015 and longer, and this level right in here, right around $26, is pretty important. I think if you can get back above there, not quite ready yet, but could start to really set that one in motion. Square, recent IPO here, sort of already seems pretty hated. I don't know, maybe that's just the gist that I'm getting. Maybe that's not the real sentiment. Take a look at a 15-minute chart. Look at this really nice tight coiling pattern here. Watching this lower bounds at 1180 for a breakdown. Really what I'm looking for is a breakout though, 1225. If we can get a close above that, this one could really sort of scream here, especially year end. This type of name just feels like something that they could really push into the year end if they wanted. We'll see. But that's a pretty tight pattern there that seems pretty actionable. And then finally, we'll go to a really long-term play. You're going to talk Bank of America, which I haven't really looked at in quite some time, but I did notice, go to a weekly chart, you can see nice cluster of highs here right around this $18 mark. You can see we repeatedly failed. But if you zoom out even more, 2010, this was an important level. 2009, 2010, this was also a level where Bank of America really started to fail. Go to a monthly chart, you can see what this looks like. So we're at the top end of this range. We've been basing out very, very cleanly, just bumping up against this $18 level every so often over the past couple of years. Looks really constructive here, and especially XLF, like we talked about at the beginning of this video, was one of the hot sectors that rebounded pretty strongly today. So, perhaps rates going up, markets seeing it, banks gonna naturally get a little of attention. So if, depending on how you want to take advantage of it, BAC could be a long-term play, or you could just, maybe try and just keep cutting, going for the trend and taking little pieces out of it. So that's what I have for today. Again, check out the memberships if you are interested in what we do here. These types of setups that we just went through, these tight patterns, these breakouts, it's what we do every day. So again, price is going up soon. If you like it, have any questions, contact me. As always, thanks for watching. I will catch you next time.